Welcome to our comprehensive guide on whole life insurance. Is it right for you? By the end of this video, you'll gain a deeper understanding of whole life insurance and determine if it suits your financial needs. Let's dive in. Here's the agenda for this video. We'll start with an introductory explanation of whole life insurance. Next, we'll discuss some concerns associated with this type of insurance. After that, we'll explore if whole life insurance is a scam. This will lead us to some key considerations to bear in mind. We'll also introduce alternatives to whole life insurance and end with practical steps you can take to review your policy. Whole life insurance is a type of life insurance that provides coverage for your entire life, unlike term life insurance, which is only valid for a set period. Whole life policies include a cash value component that incrementally grows over time. There are several concerns to consider with whole life insurance. These policies can be quite expensive, as a significant portion of your premiums might be consumed by fees and commissions. Additionally, the growth of the cash value component often doesn't outperform other investment types. There can also be conflicts of interest, since financial advisors may promote whole life policies for commission benefits rather than truly assessing if the policy aligns with the client's needs. Now it's time for a quiz. What is a major concern with whole life insurance? Is it high costs, lifetime coverage, or free policies? Pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is high costs. One significant concern with whole life insurance is the high costs associated with it, as a substantial portion of the premiums can go towards fees and commissions. While whole life insurance might have its drawbacks, it isn't a scam. For certain financial strategies such as estate planning or requiring a guaranteed death benefit, whole life can be suitable. However, it often does not align with the goals of individuals concentrated on retirement savings, especially during the early stages of their career. To assess if whole life insurance fits your needs, first, evaluate whether you require permanent coverage or if term life insurance suffices. Next, compare costs by examining fees, surrender charges, and potential returns. Finally, seek independent advice from fee-based advisors who do not have a financial incentive to sell you insurance. Let's explore some alternatives to whole life insurance. Consider term life insurance, which provides coverage for a defined period and generally at a lower premium. Investing the money you might spend on whole life policies into other assets, such as stocks or bonds, could yield better returns over time. There are several practical steps you can take to manage or reassess your current policy. Start by reviewing your policy to grasp its terms, costs, and cash value. Evaluate your advisor to ensure they act in your best interest rather than for a commission. If the policy doesn't fit your needs, it could be beneficial to cancel it, keeping in mind the possibility of a loss. Additionally, finding a new advisor aligned with your financial goals can bring fresh perspectives. In summary, whole life insurance provides lifetime coverage with a cash value component. However, it's vital to consider the high costs and comparatively lower returns. Consider alternatives like term life insurance or investing money in higher return assets. Finally, always seek independent financial advice from advisors free from commission-driven biases. Thank you for watching. If you found this video informative, don't forget to like, share, and subscribe. Join the conversation in the comments below and let us know your thoughts on whole life insurance.